Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. I made a pre-market video here, but I did write for SPY 469 is my equilibrium level, bearish below it, bullish above. If 469 recaptures, I'll be bullish with 470.5 and 471.3 in play. Above 471.3, possible higher low is in. So basically, I'm just looking to react, guys. No crystal ball is involved here. If you guys recall in my last video, I did talk about that 469 level that was based on my pink trend line. And I mentioned we don't want to call tops, we don't want to call bottoms. Remember, this big drop that we had, this $10-ish drop that we had, was triggered by a false breakout setup. And remember, I talked about how the move down was very trappy. And you can see with Uncle's level, false breakout, false breakouts, false breakouts, trapping the bulls on the way down. We know this market has a trappy nature. So I mentioned, we don't want to call bottoms, guys, all tops. We just wait for the right setup. So for there to be a bottom or a move back to the upside, we needed a false breakdown setup. The 469 level, this is my 15-minute chart. This green line here, you can see what happened when we cleared 469 on the 15-minute chart, and it just pushed higher. Why was that 469 level important? Because it was based on my pink trend line. We needed that false breakdown setup to trigger calls. Okay, that's my core setups that I play every day. False breakouts and false breakdowns. I just trade with the traps, and I encourage you guys all to understand that this market is trappy by nature. It's looking to cause us, the retail traders, maximum pain. The market makers are not our friends, so we must use that information to our advantage. Instead of being victims of the traps, we trade with the traps. That is what being a sheep is all about. Bah! Now that we got the false breakdown setup, we must ask ourselves the question, who was the last to get trapped? In this case, it was the bears that were the last to get trapped. The dip buyers stepped up. So because of that, we need to trade with the trap and keep our sentiment with the trap. So since the bears were the last to get trapped, we should be bullish, okay? But not just be blindly bullish, okay? We need to figure out the bull case and the bear case. So if we're going to be bullish, we need to know what does the price action need to do for us to stay bullish, and what does the price action need to do for us to switch back to bearish, okay? When it hits 9:30 a.m., you guys, I encourage you guys to not be worried about where the market is going, but instead worried more about what setup you're going to play today. What's the setup today, market makers? You understand? And then you just play it unbiasedly, level to level. Catch that level to level move. Leave a runner. Okay? That's Uncle Charles' trading plan, style, whatever you want to call it. And that's what I hope that all of you guys can gain from my channel, is to learn how to trade price action better. And to trade price action is to trade unbiasedly with the traps. All right? So today we got to close at 474.6. I do have that resistant level at 475. If that clears, 476.5, 478.5, and all-time high are back in play. Okay? As long as above 473 and 471.3, I am bullish on the SPY, and we could go up higher. All right, that's the bull case scenario. What's the bear case scenario? Of course, as usual, we need that false breakout setup. We need that false breakout setup for a lower high to be possible. So that means now that we got this big bounce, this big body green candle, we either, if you're a bear, you either want to see tomorrow be choppy to try to set up an evening star pattern, or we break down support. Give us that false breakout setup by breaking down 473, breaking down 471.3, 470.5, and of course 469. If we break below 469, I'd definitely be bearish because that's where we had the false breakout. Excuse me, because that's where we had the false breakdown setup at. All right, that's where the trap was at. So if we break down 469, this trap setup gets invalidated. All right, and if it gets invalidated, that's more reasons to be bearish and favor more downside down to 467, 465.5 in the critical level of 464. This is where FOMC, when we bounce December 13th, this is where we bounce for FOMC. So buying pressure was there. That's definitely a level to watch if we drop back to the downside. Okay, and of course below that 462 and 459.4. That is the bear case scenario. Is this simple for you guys? Let me know if we're all on the same page. Okay. Overall, if we break 475 tomorrow, bullish, more buying pressure. If we chop tomorrow, be careful. Could be setting up for an evening star pattern, and bulls already ran out of strength. And of course, if we break down support that I mentioned, bearish. All right, but as of right now, dip buyers look like they stepped up, and bears were the last to get trapped. There's one more thing I want to talk to you guys about before I move on, and that's seasonality. So if we are moving up to the downside, when could we possibly get a top? All right, I don't like to call tops, and I don't like to try to act like I can see the future and tell you guys what is going to happen. But if I am going to do it, I am going to use data to back me up. Okay, this is the seasonality based on 20 years of data, the average price action movement of the SPY for the last 20 years. So this is not a crystal ball. There's no guarantee it will follow, but it does follow or track more than it doesn't, and it's just the average tendency. And based on this, the average tendency is that we usually get a top around mid to early January. So we're approaching that time zone, okay? And from there, that's usually the second half to the end of January is usually bearish. All right, that's usually around earnings seasons. So yeah, we'll see if seasonality will track for 2024, because you know, sometime it doesn't, sometime it does. It does more than it doesn't. So if it does, watch out. Either at the end of this week or maybe next week, we could possibly get a top. And we do have CPI later this week, so let's see what happens. Either way, we are sheeps. In order for seasonality to follow or not follow, price action must confirm it. So for me, it's best to keep our eyes on what's most important, which is the charts. Okay, let's move on to triple Q. It recaptured that 398.75 level and just pushed to the upside. The next fib level I have is at 405.4. If it clears tomorrow, guys, that's bullish. We are likely heading up higher, maybe fill the gap. But I do have 408, 410.8, and 413 in play. Above 413 is new all-time highs, okay? Support is at 404 and 42, 400 and 398.75. The false breakdown setup on triple Q was based off the 398.75 level. So if we drop that below that, that trap setup gets invalidated, and that's when I would be pretty bearish on triple Q in favor more downside. All right, so we break above 405.5, bullish. If we start breaking down support that I mentioned, 404, 402, 400, and especially 398.75, that's bearish. IWM managed to bounce and recapture that 193.3 level for follow through. Right now, it's around 196.7. So the next critical fib level I have is at 199. So if 197 clears and 199 clears, that would be bullish, and I'd favor more upside up to 203 and possibly up to 205 plus. Okay, support is at 195. If 195 and 193.3 fails, I would look to short and favor more downside back down to 191 and possibly down to 188.4-ish to retest my blue up trend line. Tesla got a nice big bounce today, and it managed to close above 240, okay? As long as above 240, that bounce from my fib level at 234.6 is showing some follow through, and that will put 242, 244 in the back test of the rising wedge, which is now at 245.5. in play. If we recapture 245.5, that would be a good look for the bulls, but they'd have to deal with that fib level at 247 and the gap fill, which is around 248.5. All right, those are resistant levels, and of course, if they clear, look to long, play it level to level with runners. For me to be bearish, it will have to drop back below the levels that it cleared today, which is 240, 238, 236, and it definitely needs to break down that fib level at 234.6 to give us a lower low. NVDA was a monster. I wrote in my Discord today, bullish above 488.7, bearish below it. That was my equilibrium level. I did right here, bottom only in if 498 and 500 clears. I mean, we're just following the price action. It was just so beautiful. I did catch a piece of the move, not the whole move, but hey, it was good enough for me, okay? So if you're trying to trade it, be careful calling a top, but also be careful trying to chase. It's a very tough situation to trade NVDA right now, but overall, follow the price action and do not trade with greed. All right, support right now, well, it's around 423.9, which means support is at 423.5, 523.5, 522, 520, 518.5, and 516. Keep in mind, these are all fib levels that I have here. Yeah, if those levels break down, maybe we can get a pullback. All right, it's around 523.96. Like I said, we break down 523.5, 522, 520, 518.5, and 516. Maybe we get a pullback. Okay, as of right now, it's gone parabolic. As long as above 523.5, next resistance I have is at 525 and 526.6, with 528.8 above those levels. They could possibly clear, guys. Don't call a top. And if you are going to try to chase this, manage those risks wisely. Apple bounced off the 200 daily moving average last Friday and showed some follow through. If it wants to keep showing follow through, 186 needs to clear tomorrow to go test that 50 daily moving average, which is at 187.7ish right now. And then above that, it's 190 and 191.2. If those levels clear, bullish. For me to be bearish in favor of pullback, it needs to reject from 186, break down 184 and 182 to put the 200 daily moving average back in play, which is around 180. And of course, below 180 will be a breakdown, and I would definitely be bearish on the Apple. Microsoft bounced off that 50 daily moving average last Friday and showing follow through, recapturing the white trend line. Now, if it can break out the green trend line tomorrow, which would need it above 375, that would be bullish. Okay, long above 375, and I would favor more upside 377 and 380 plus. Okay, to be bearish, it needs to break back below 372.5, 371, 369, and then the 50 daily moving average is at 367.4ish. Those levels break down, bearish, guys. AMD, what a monster. We talk about that macro level at 140.7 for AMD. It did reject last week, but not today. Broke it out intraday, smashed 142, cleared that, and it just went up higher, okay? So support is at 146 and 144. As long as above those levels, 148 is the next fib level. And if 148 clears, guys, we are heading up higher, maybe back up to 151 and 152.6. All right, for me to be bearish, it got to break down support 144, 142, and especially that 140.7 level. Those levels break down, then I would favor we drop back to the downside. Otherwise, just look to react, guys. Look to react. Google broke back above my blue trend line here. As long as above 140, bullish. 142.4 is in play, and if we can clear that, we go to a higher high. 144 would be a target with 145.5 and 147 to the upside. All right, a break back below 140 and 138 would be bearish, and the trigger to go short. Netflix, wow, had an inside daily candle, broke the mother candle's high, which was at 480.7, going as high as 485.2 today. All right. The gap fill is at 487. That's the next target. If it clears that, 490 and 491.5 is in play. Possibly even higher than that. Look at this trend. Higher highs, higher lows is what it's trying to do. All right. If it breaks back below 482.7, that's your trigger to go short with 480, 478, 475 or lower in play. Meta cleared that 358 level. As long as above 358 bullish, we are likely heading up higher, up to 360, 362. Maybe even go as high as 366 plus. All right, I would be bearish back below 358 and 356 to put 354, 352, and 350 back in play. Amazon recapped some levels as well and ran right into that 50% fib level, was at 149.2. If it can clear that tomorrow, 150.7 and 152.6 would be in play. To be bearish, it has to break back down 147.7 to put 146.5, 145.5, and 144 back in play. All right, guys, what else do I have? Oh, yeah, AVGO. How did that go? It gave us a bounce. I mentioned yesterday, if we recapture that 1,059.6 level, look to long, and it smashed that next fib level, which is at 1,076. If 1,076 clears tomorrow, get some bullish follow through here. 1,085.7 is a gap fill with 1,096 above that. To be bearish, it's going to have to break back down support starting with 1,069.5 to put 1,059 in play with 1,048.2 below that. That is a mouthful. Shout out to my viewer who asked me to cover AVGO. I do it for you, man. Darkpool levels, 468 was the most orders we have around for 1.8 bill. Probably changed later. That's why it's good to be in the Discord. Tier 3 members get access to this, so when it changes, you'll know. And then the second was at 474.6, guys. Add these levels to your chart and label them Darkpool levels. SPY will filter for 100K premiums or above, and it is bullish. Uh-oh, SPY is bullish, guys. Even QQQ is bullish. Is IWM bullish? No, IWM does not agree. Okay, we'll definitely be tracking that. Tesla's bullish. NVDA is bullish. I'm going to have to do this a little slow, guys, because this thing be crashing on me. Apple is bullish. Microsoft is bullish. What's next? AMD is bullish. Google, bullish as well. Netflix gave us nothing. Meta is bullish. Did I check Amazon? Amazon is bullish. And AVGO is nothing for AVGO. Look at that, guys. We actually got through it this time. And Cheddar Flow did not crash on us. Thank heavens. Thank the Lord. Thank you guys for being here. If you guys did not subscribe yet, please subscribe. And I do have a 50% off deal going on right now. Definitely take advantage. All right, if you want to join Uncle's Discord, let's get this money, guys.